Welcome to Charts and Coffee, gang. Happy Thursday. Hope everyone's doing great. All right, we just had our PCE. So I know some of my Sector Secrets Mastery folks are rolling out of that bonus session. Got a quick look at how we can, not for everybody, it is aggro, but how we can trade hot zones, really high impact ones, using hourly price movement ranges, which look at time and volatility. And using that, we can get an idea of where support and resistance are at. Nothing really triggered today. I was looking at three different corners of the market. The long bond. Kara, go lay down, girl. Go down. I was looking at three markets, the S&P, the bond, and the euro, which allows us to look at the indices, treasuries, and the main way to trade the dollar, the easiest way to trade the dollar without needing DX futures access would be the 6E. The dollar index basket is 50, almost 58% euros. That's a great way to play the opposite of what the dollar is doing. So if the dollar's strong, you would short euro. If the dollar's weak, you can buy euro. And those are the three markets that typically in front of these macroeconomically sensitive hot zones, those are usually one of those three, or maybe more of those three, is what I'll be looking at. All right, so with that in mind, what we have going on today really just starts with the PCE, right? And yes, I do generally think the PCE is probably going to be the more impactful of the hot zones that we have this week, meaning we already had a number of them. And initial claims, by the way, was kind of a wash and sort of got put into the backdrop with the inflation number. The biggest takeaway from the PCE, we may not see a lot of movement in equities, but again, this is big. We continue to see the target rate probabilities factoring in a less hawkish expectation for where rates will be come May of next year. That seems to be where we peak in terms of the target rate, which is what a lot of you have probably heard being called the terminal rate. I like the peak rate. What the heck does terminal rate mean anyway? This is the highest high we're expecting, right? And as long as it stays somewhere stuck to 500 basis points or 5%, the Federal Reserve will probably not have to course correct with words all that much. And when the PCE year over year is indicating that we have flat, as you can see here, flat inflation. Remember that this 1/10 tick lower supports their outlook, which is we're expecting inflation to continue to head lower, but yet we know it's still too high. So they can say, look, it's still too high, but it's heading in the right direction. And that allows them to remain less hawkish, right? That's super important. And then we do have the ISM manufacturing PMI, which can also be put in that inflation category, as well as Bowman and Logan right before and at the bell. So I don't know how much Logan and Bowman are going to affect movement during the clearing, but nonetheless, we have two FOMC speakers right there. Okay. All right. Next, we have tomorrow's non-farm. So today's flat-ish, if not slightly better inflation number. If we get a big jobs number or even in line, this could continue to send equities generally higher. All right. Okay. So that is what we have in terms of reactions to the data so far. Let's jump into the questions. As always, feel free to type in your questions and we'll kick it off with Avi. All right. Based on what I learned from you, okay, cool. Tesla is a short, technically. Yeah, so we're looking for a short. So I'm not trying to mince words, but let's really be specific. I'm bearish in Tesla. Correct. Yes. Where we short from, well, that's the strategy, that's the tactics, that's the analysis, right? So yes, I am bearish Tesla. Technically, so yeah, from a technical perspective, meaning the indicators, the secret squiggles, yeah, absolutely. Red trend up to the 34 EMA, which is lining up pretty nicely with a Darvis resistance sitting at about 199. Yep. And then let's see. The problem is ES is green and bullish sentiment. I don't have an uptrend on the ES yet. It's trying. Agreed. Avi, today is the first day, gang. We are getting a transition to a green look at the trend on the S&P. We haven't seen this since August 10. So I need 2 days like this, Avi, not just the one, but you're right. We're starting that process to a bullish transition. Agreed. And by the way, why wouldn't we? If you notice, Dow started and it's got the most established uptrend because of healthcare and financials, but healthcare and financials are also quite heavily weighted within the S&P. So there's a certain inevitability to the Dow's heading higher, if financials are heading higher, if healthcare is heading higher, tick-tock, right? S&P, as long as tech doesn't drag too far down on it, S&P should also turn into an uptrend. So how would I handle that? My preference is this, Avi. If I'm looking at XLY and I look at all the stocks within the XLY and I ask myself, I think this is the question that a lot of us need to ask. Why do I need to trade Tesla? Right? I ask myself that all the time. When I pull up a symbol, I'll ask myself, why do I need to trade it? Why am I interested in it? If I'm looking for a short, Amazon and Tesla, by the way, would be my choice. There are a number of shorts, but then I ask myself the question you're asking yourself. Why would I look for a short? Are there not any pullback buys that would be better? And for me, pullback buys should come before a short the rip. So why would I want to trade Tesla? So when you talk about the problems, yeah, the problem is on one hand, I've got a neutral consumer discretionary. I've got a bullish S&P. NASDAQ could follow suit, but for now it's not. So why would I want to look at a short, right? And I don't. I guess the simple answer is, Avi, yeah, I'm not looking at shorts in Tesla. When asked, I'll talk about what it is I'm allowed to do based on structure and strategy. But I'm not looking for shorts at all. In fact, I haven't really been, other than say for day trading and a couple things like say short, maybe euro from time to time, but I'm not looking to short indices, sectors, or individual stocks. That's a great question. When we have that conflict between the index and an individual stock, what would I do? I'm going to follow the tide. Yeah, great question, Avi. Next up, Prince asks, when I'm winning in a trade and moving to a trailing stop, how far will the stop be from the current position? Depends on the setup, Prince. It depends on the setup. All right, next up, or it depends on, the symbol, right? And the volatility. Let's see. Good morning, Mimi. I've noticed the market jump pre-market and didn't see that before. Has it always been that it jumps pre-market, or has something changed? Am I missing a report or something? Mimi, we get gaps all the time. Well, I shouldn't say all the time. Gaps are not unusual, however. So that oftentimes is going to be, why do we see a gap? Say, for example, on S&P or what have you. Gaps happen because markets aren't closed per se overnight. New York Stock Exchange closed, right? But the markets, when we talk markets broadly, currencies are moving, treasuries are moving, metals are moving, energies are moving, indices are moving, futures are moving, Forex is moving, right? And then stock with their little wimpy 9:30 to 4 o'clock trading hours have to play catch up to all that opinion that was happening while it took its little nap, right? So, what we have is a catch up of that sentiment that occurred during the Asian session and during the European and the UK. All right, so that's where the holes in the chart, the gaps come from. So gaps are not unusual. In terms of the report, right? Take a look at Forex Factory, something we talk about on the regular, both here in Charts and Coffee, as well as in the futures room and in my Sector Secrets Mastery. Part of the way that I look at the markets, a lot of my sector folks know this. Sector foo. When we are sector foo, we know what, right? The martial art of sector foo. For those of you not familiar, part of the preparation is what is on that economic calendar, not after 9:30, right? Not after 9:30, but before the bell. All right, next up is good morning. I'm curious about what you are seeing on your charts for DG after earnings. After earnings, I typically, let's see, for DG, I'm not playing DG earnings, I will say, my friend. However, as far as what I would look at after earnings, um, earnings this morning, I'm a little lost on that. Am I looking at the wrong symbol? I'm looking at TOS here. TOS has earnings here. Yeah. Was it today? So, oh, it was today? I can't even see that. 233. All right. So what would I do with something like DG? Well, let's go take a look at the pre-market. Okay. So we gap down. So we're sitting at what? 241. Okay. Here I am squinting. I clearly need my eyes checked. 241 is going to put us way down here. Okay. Oh, but here's what's cool. 403. Here's what's cool. DG. So remember, I'm not going to play before earnings. That said, what has earnings given us? All right, this might be worth watching. I have support at the Darvis level. So there's a level that's already clear in this area, right? We're just below that, by the way, but we have support in this area. And then take a look at the neutral structure that we've had since August. That's overbought, oversold. I don't have my stochastic or even my V-score giving me confirmation of oversold. But if I can get down to that level and form a nice reversal pattern, inside day, minor low, that would be something that could be interesting because this is not a trend. Therefore, the lower end of the range, whether that be defined by Darvis or whether that be defined by a slow stochastic or the V-score, the lower end of the range could be something worth watching. All right. Jose says UUP. UUP is going to move lower. I don't know what the question is, Jose, but UUP is going to move lower on the open, as you can see here. Looks like 28.33, which is going to put us in this area here. All right. If you're in the Sector Secrets room, I've already alerted out what your choices are for UUP. I do like UUP. I have an aggro position on my cards on the table. I do have a small budget, what I call an aggro budget position in UUP open here. Certainly it's going to be fine. It might take on some heat here, but I'm not. And one of the things that was so tricky about this setup is looking for a bounce in the midst of a very fresh transition to a downtrend. So when it comes to, and actually there's three symbols that are like this. When it comes to gold, when it comes to dollar, when it comes to euro, the next set of trades that I'll be focused on for all three of them will be trend following and no longer fades. All right. Next up is, bear with me. Mike is asking Credit Suisse prediction. No clue, Mike. Seriously, I have no idea. I'm not even paying attention to. Is there some big news out there that I'm unaware of? I'm sure there is, but no, I have no clue. What Credit Suisse? No, my friend. And then my bigger question is, what would ultimately answering that question map to? A lot of times, gang, and I'll admit, I am blissfully ignorant of a lot of news out there because when I ask myself if I were to understand what that headline means, or if I were to sort of analyze what that news means, does it map to a trade? And if I can't say yes, I have learned to be tactically apathetic to nearly everything that goes on television and most things that stream across my Twitter feed here. I've become really blissfully ignorant and wonderfully apathetic. The things that we should care about as traders are really pretty finite. So I try not to. So I don't know. Shopify, I would probably look to likely buy the dip on Shopify. It's trying to turn into an uptrend. Let's see. Avi says the SPY is 3 days. SPY is 3 days. I don't follow, my friend. The SPY is 3 days. Let me know. I might have been in context of something else we were talking about. Yeah, let me know, and I'm happy to revisit that. Let's see, Robert. Good morning. I was looking at Walmart for a possible long. All right. I love when you all tell me what you're seeing. Awesome. All right. So thanks for the question with telling me what you're seeing there in the symbol, Robert. For a possible long, do I think it has pulled back enough, or can we look for lower? Love this, Robert. No, it has not pulled back enough, but I love that you're looking at the structure to dictate strategy. Fantastic. And not enough. No. What I have on Walmart, let's see here. If we're going to look at Walmart to the long side, gosh, the 8 EMA is where we're sitting, which is a very shallow retracement. And I'm not going to rule out that we could just slice right through that. Yeah. So if you want to be really aggressive, maybe the 8 exponential, 151.35, 151.40, that area, even 151.55. But here's what I would recommend going with what I call an agro budget. Do not pile in at that first opportunity. And then ideally, if we pull back in the next 4 to 5 days, look at the 21. If not, the top line of the wave is sitting at about 145.70, 145.80. All right. So I want to play a pullback. Love it. The other choice is a reversion to the mean. Now, where would that be? If I look at a reversion to the mean, and by the way, gang, I think a lot of folks get a little thrown by that lingo, reversion to the mean. And I know early on I used to, until I finally realized there's no one mean, gang. So it's really important that if someone says, I'm looking for a reversion to the mean, the first question should be of what? The mean of what, right? And when I talk about reversion to the mean, I'm going to be talking about reversion to the mean of volatility or volume. In this case, I'm looking at the volume support. Gosh, the mean is at 136.5. I don't know that we're going to see that. I really don't. Not within the context of an uptrend. So I'm not looking for a quote unquote mean reversion, but I would be looking for a retracement. And another way we can do that would be just pull a quick Fibbo of the last major move, and maybe 146.5 could be interesting. All right. Okay, moving on to, let's see here. Next question is, what do I think about Meta? It's a downtrend that's gone neutral. The 1, 2, 3 has taken far too long to be really helpful. However, if I'm going to buy anything, I'm not going to go shopping necessarily at the bottom of the barrel, so to speak. That's really what Meta would be. If I'm going to go long, I want to find things that are already quite strong and then buy the dips in those trends. All right, that's what I would look at there. What are the resistance levels on the S&P? I'm going to take a look at the daily because I don't know what time frame you're looking at there, Benny. There's a lot of different resistance levels on S&P. The one that's catching my eye right now is going to be a level that we have been having an issue about, having an issue with getting through, and we're trying to right now, as we're trying to also go green trend. And that would be the mean of the V-score. So we've had an issue getting through this throughout November. And here on December 1, we might be finally getting through that. So between this area around 40.95 or 40.85, sorry, and 4100, this could be where the battle is being fought for, who's going to own the S&P, bulls or bears. Getting above the mean of the V-score should be a pretty big deal. All right. And last question, Andres asks, what do I think about yield curve inversion? Should we worry about a recession? I haven't given it a thought all year long. Don't care. It's one of those things that are great talking points that a lot of super bears have circled back to. But I'll tell you this, they've been proven wrong. They've been proven to be fear mongers. And I'll tell you what, my friend, once we redefined what a recession actually is, the Federal Reserve, what's the definition anymore? Right? So the kindest way I can put it is I don't give a rip. And really neither should anybody else if you're focused on trading. Just don't care. I've put on longer term positions on the weekly. We've got some longer term positions on the daily. Follow the structure, gang. All right. Thanks as always, gang. Wrapping up our show. I will see you all tomorrow, same time, same station. And in the meanwhile, be good to each other, gang. We've got a busy set of data points, FOMC members speaking in about 4 minutes. And take a look at that calendar. It's a hectic one. Be good to each other.